Xavier Festival. Good. Today is NFP, and NFP matters, and the economic data print of NFP is going to affect market dynamics in a way never seen. So we're going to pay full attention to NFP data report and as well as other data prints that are coming out. So let's quickly dive into the structure of this USD and possibly see what what lies ahead for the pair. We have to look back in time. This bullish rally, the way the bullish rally started, and the breakout from the bullish rally. And if we go back to our previous post, when we had our breakout from this rally, I specifically mentioned a breakout from an uptrend. And because we our strategy is more looking out for break of structure. So every time there's a break of structure, we we always see it and start to track the record. I have a couple of records that kept to keep in mind that break of structure and as at the time that we announced that break of structure. Now you see price have created a structure at this level. What structure did the price create? The market created a buy structure. So the sentiment remains buying until you have a break of structure. The market bought one small again, broke out from the structure, and retested the structure. Ladies and gentlemen, today is NFP. If NFP data report comes out weak and that weakens US dollar, SAU have no choice but to continue upswing. Let me make it this way: to continue upswing into 2,727 or into 2,728. So, in case you are doubting the possible movement of the candle, let's take a look. We have one bearish candle. Wednesday, entire Wednesday, these are fundamental candles. So in one single day, you can have a travel up to this level in a single day. So we'll be watching the data print to see what it comes up like. And now this is our first litmus test where this becomes your Nelson zone on retest. And price at this level will be on sentiment. That does not mean that the market will want to break this structure. The market will not break this structure. There's no way it's going to break it. So that will be your number one sell. Then the second litmus test we have is the W structure, which is a bullish price action, bringing price from bearish to bullish, and the neckline broken and retested multiple times. And that is the foundation that is being contested since for a very long time. So buyers are doing their best to see if they can break that bond. Inability to break that bond will ultimately mean that price will continue to play below it, and as long as price remains below it, then forget about further future uptick. This is the structure. You can see the structure is tested. Let me get this thing off. So this is the structure. That's our new litmus test. It's also indicating that SAU is trading below supply. You can see the breaker structure here from the W structure. We had a bullish price action, market selling down and formed a W structure. A W structure, a double bottom. The break of the neckline, retest one, price sold off, return, retest two, sold off, buy off, sorry. When price returns here, it buys. Then price returns again buy before break of structure. That structure is broken, meditating for retest. Retest one, retest two, and retest three. So, what does this mean? Now we have other evidence to back that level up. At this level, we have a head and shoulder chart pattern. This head and shoulder chart pattern also sit at 77, 77, 78, 79 level. So what does this mean? What this means is that it has the ability to send price banking from this level. It has the ability, without question, to send price banking at this level due to the price action. If you look critically, you will see what price have done. This is a head and shoulder. This is the head. This is the head. This is the shoulder. This is the shoulder. Break of the neckline. There is no retest. In fact, the price left without retesting the neckline. After price forming this chart pattern, this is a bearish chart pattern. So the indication of good bearish day started from here. When price formed head and shoulder chart pattern, this is the shoulder, this is the head, this is the shoulder. Breakout without a retest. But on a lower time frame, but you see, the thing about trading the financial market is that it remains very dynamic. Now, it didn't retest on a horizontal level. It retested on a descending level. Now look at this is the retest. This is the retest of this neckline. And because a lot of people are not going to see it, this is the retest of this very neckline. There's no way to tell. This is the retest. So you can see after price formed this head and shoulder chart pattern, you break up from the neckline, retest one, retest two, retest three, retest four, break up from the neckline. Now, break on neckline now became bullish because it now become break and retest, break up from the descending trend line. And that descending trend line is a neckline, an inclined neckline due to the nature of this kind of head and shoulder. But on a horizontal structure, you see that the head and shoulder has not been tested after breakout. So what does that mean? And there's a probability that here we have two confluence. We have here an ascending trend line, and we have here a horizontal structure. What does this mean? That if we have had an expected NFP data point, then we are going to have the price action from here. After price break of structure, price pulled exactly down to this level. So if that happens, then on technical, what we are going to have is the same price pull down from here to this level. And when you look at it critically, you will see that if we begin to pull out from there, then we are going to come to this level. So this will be the next level where you look at for potential buy opportunity as gold remains bullish. So gold remains in a bullish net. So investors are cautious. Nobody knows the outcome, and the Trump presidency has remained bullish on US dollar. So as long as the new president remains bullish on US dollar, I think it's high time I will begin to see significant upswing in the greenback. So this is my analysis, and this is how I perceive it. And I think this is the best we can accept. If there are other things we are missing, we can continue to look at it to see if there are other things we are missing. And if we figure out other things we are missing, we will come back here to add what is missing. This does not represent the true direction of the market, but it gives you a view into the structure of the market. So that with the data you have here, you can go back, add it to your strategy, and see if there's anything you can do to. Another thing we want to note here is how price have failed to return back after break of structure. See from this level, we have on this level there's a break of structure at this level. At this level there's a break of structure indicating that the buying potential, they are waiting for an opportunity to swing this market. Waiting for an opportunity to swing the market. So you can see the structure at this level. So I think the market is looking for an opportunity to swing up. So they are very ready. Good buyers are ready to go long. They're waiting for opportunity. You can see the break of structure at this level. Price tested one, retested two, tested three. Break of structure yesterday. And price returned and kept it very strong from 2665. Price kept on to 2679 and attempting to break this confluence. This is a very strong confluence, a horizontal and ascending trend line meet a horizontal demand supply floor. So what does this mean? This structure was broken. The break of the demand floor becomes a supply reef. You can see the structure. After break of structure, price return, break the structure. They couldn't pass it in, respected the structure. Respected the structure as a supply reef. And when price returned, they respected it here again as another supply reef. So it was respected again as another supply route. Break the supply route becomes the demand floor. Now the demand head price formed head and shoulder and broke the demand floor. It technically should respect here. But if it doesn't respect the structure and the structure is broken, then you have here as a very strong demand floor where price will now trade up. The break of the structure also means good for us because whichever way market goes, your bias must change. Cannot be static. Cannot be static. It's just like being in a bad way. If you're in a bad way, you find a way and come out because nothing is going to change if you're in a bad direction. You don't come out, honestly, nothing is going to change. So this is one thing you must learn in your mindset training in trading. So in a bad trade, you must find a way to come out. You must find a way as fast as possible. If you think anything is going to change, then you are making a mistake. Nothing is going to change if you get yourself into a bad trade. The only thing that will change that will favor you is to come out. That's the only thing. Come out and take the loss, meaning that you didn't analyze properly or you didn't wait enough. Most times analysis are right, but inability to wait is a problem. So what we see here is a classic chart that should represent what we are about to see today. And am I hopeful of this chart? Yes, I'm hopeful of this chart because two things are likely to happen. If we have a data print that favors the US dollar, then we, from here, because this is a strong area of confluence and begin to drop and come down to this level, it is where we'll find ourselves. If we have a strong data print will come down here. And besides, you can see the structure. The structure has already tapped into the roof. Look at the black channel. After price broke out from this structure, it retested the roof of the channel, retested the roof of the channel, retested the roof of the channel again, the roof of the ascending trend line. Now we have a roof and a floor. And price updated the floor once, updated the floor price, updated the third time. And we expect another retest into this floor on on the weaker US dollar, then the price has to go up. It has to break the structure and return to the top. And if it returns to the top, then that means a good buy. We actually we actually trend very high to the point that you begin to see gold above 2,800 hourly needs. So we are using these techniques because this is how the market moves. Now we're actually angle of trade. So we are banking on the angle of trade to give us a potential buy sell opportunity, especially when we are getting the price action at the bottom. So the price action at the bottom, we are going to use it as a litmus test to continue to see how the market will react in a long time. So here we are faced by two strong conflicts. That two strong conflicts is one, a horizontal demand supply structure, and another one is an ascending structure, also with the characteristics of demand and supply. We have here a double structure breakout. This is the retest of the neckline. Another retest before the break of structure. And price have come to respect. They tell us that this was actually a broken structure. And we tested it one, we tested it two yesterday, and it's back. Will it break the structure? Yes, there's a probability. The reason I say there's a probability is that we have NFP data. So what does this mean? Economic analysts and monetary teams already they know what the result is. So what they want to see is the announcement and how the market reacts to it. So what happens is that if this structure is broken, then price might likely come back to the test in 15 minutes and continue to trade on until you see price move into 2,000 735, break of a previous high because it will be a retest of a broken ascending trend line. You can see the structure. So if we have um, a stronger NFP and that strengthens the greenback, then we begin to see price retrace after 4 hours, where we see this area serving as a strong barrier to upswing, and that will indicate a bear hood of the yellow metal, where the metal we have no option but to retrace at this level and begin to come down. And we will see visible evidence by break of the ascending trend line. We have an ascending trend line of price on the bullish pedestal. Buyers have leveraged on that single line to continue to print higher high. For every time price touches this ascending trend line, they have used it to guide their buyers. So what happens is that if we have a breakout from the ascending trend line, then it will become an indication of a bearish drop where we see if there's an opportunity for price to, after breakout from the ascending trend line, a retest. A retest might be at the same level, 79, 80 level, or it might even print up to 86 and begin to drop from there. And if you look at the structure, it makes a whole lot of sense to begin to sell from this level because at this level, this structure is complete. So on technical, it is going to be what we expect it to be based on our technical analysis. All we are waiting for our fundamental analysis. Without fundamental analysis, every technical analysis is useless. I'm sorry to say it. So you can be very good technically, but if you cannot marry economic data with your technical, then you are not uh, you are not ready for the big shift. So you see, we have another thing here. That's another descending trend line. Another descending trend line here, and that descending trend line also bearing witness of a potential drop in price. So what does this mean? That price might swing up to 83. A swing into 83 will marry the descending trend line which have connected the previous all-time high to 2,721, and at that point we are having now the top confluence indicating a potential sell of SAU USD. This could not have come as a surprise. If the market makers already have an insider of economic data points today, that could be a reason to continue to buy the market into 2,683 level to enable them have more confidence to sell. What are the confidence that awaits the bearish drop of SAU USD? I think at this moment there might be some insider information, and that is why good buyer have continued in order to sell from this level. We have here descending trend line connecting all-time high 2,789, 2,790, and we are connecting 2,721, and price approaching that level. And to approach that level correctly, will be in the zone of 2,683, 84. And at that level, we have another confluence. And if you look at this structure, if you want to make a zone out of this structure, the zone out of this head and shoulder structure will be in this form. So it will be plus minus, it will be plus minus 2681, plus minus 2681, and 2679 for a potential drop. So that is what we see. And at that level, we see that we have a lot of confidence bearing witness for potential drop at this level. A lot of things are bearing witness for potential drop at this level. A lot of things are bearing witness. A lot of things are bearing witness for potential drop for this level. And if that happens, then we want to look back to see what price has done and to see the buying sentiment. That the buying sentiment started from after price updating a new high and have dropped up to this level before price picked up. And when price returned again, it dropped again up to this level. So if that happens again, that means that SAU will most likely do what others have done in the past. So if it picks up a drop from there, it will also drop the same. And in this case, we continue to see if we will retest the breakout from the the previous head and shoulder neckline. So that most likely will see price